Good morning and welcome to Charting the Markets on Friday, the 8th of September. This week has been a rather difficult one for global equity investors as these indices globally have come off over the last few days. On a rising US dollar, the US dollar seems to be on track for its 8th consecutive week of gains, and this would make it the longest winning streak since 2014. And the higher dollar has been accompanied by higher commodity prices, with the price of oil, for example, rising by over 10% in the last couple of weeks. The price of cocoa earlier today hitting a 46-year high, and that of sugar, that is New York sugar futures contracts, hitting a 12-year high. Obviously worrying investors that inflation may come back to bite us, and this has led to the hawkish side of the Fed being more prevalent again, with expectations of a further rate hike in the next few months in the US increasing over the last few weeks. And only yesterday we had the former president of the St. Louis Fed, James Bullard, say that the Fed should stick to its plan to hike its rates one more time in this cycle. All of this added to the fact that yesterday China no longer allows its government officials to use iPhones has led to stocks falling. And we saw yesterday US mega caps falling on that news out of China. But let's have a look at the UK market first of all, and at the FTSE 100. And earlier this morning we expected the FTSE 100 to get some slight positive momentum and perhaps even close the day on a positive footing. But these hopes seem to have been dashed so far. As you can see here, the FTSE 100 has failed just below the orange line for the second day running, and that is the 55-day simple moving average at 7,473, and seems to be heading back down again towards this week's low at 7,369. Now, from a technical perspective, what is interesting on this daily financial bet chart is that the FTSE 100 has bounced off on 3 consecutive days off this previous downtrend line, which now, because of inverse polarity, is a support line, and so far it has held the index up. But yes, we are probably on track for a weekly loss with regards to the FTSE 100, having seen a weekly gain last week. So the question now is basically, are we in the course of next week going to hold above the 7,369 low we made this week? As long as we do, we could see a retest of the downtrend, the new downtrend, at around 7,450, 75 or so, and perhaps the 7,500 area. But if we were to fall through 7,369, then I expect that we might actually be heading all the way back down again towards this key support area I've been mentioning over the last few weeks, which is made up of the March, July and August lows between 7,228 and 0.4. So basically, from a technical perspective, watch 7,369 closely, because that's the last reaction low, and a fall through there on a daily chart closing basis would have negative implications. But as long as that doesn't happen, we could see some further sideways trading in regards to the FTSE 100, especially since the governor of the Bank of England yesterday, that is Andrew Bailey, said that there might no longer be a need for the Bank of England to hike its rates further, and that should give equity markets some breathing space in the UK space. In Europe, if you look at the DAX 40 contract, the story is quite similar. We had a slightly bullish start earlier this morning, but that has turned into a really negative route, as you can see here, taking out this week's low at 15,650, and basically meaning that we're heading down towards the 24th of August low at 15,545, and also the 200-day moving average here in red at 15,507. So these are the downside targets for the DAX. And since these are quite close to the lows seen back in July and also in August of this year between 15,469 and 455, it is quite likely that we will also test these key support levels. And that means that over the next few weeks, it is technically very important that we hold above these lows for the bulls to remain in play, because a failure there would mean that we could see over the September and October month, another decline take us back down again towards the March lows at 14,459. So this key support area in this wide sideways trading range we've been in since April of this year is really, really important from a technical perspective. And don't forget that historically speaking, if you look at the last 30 years, for example, volatility on equity indices tended to increase between September and October of each year. And quite often September, historically speaking, is a negative month anyway. And we can see here the beginning of the month has started off quite negatively, as you can see here. Now, the bulls actually won't have much to say unless we were to take out the last reaction high, and that is to say the high seen at the end of August at 16,044. So below there, basically, we may remain bearish with regards to the DAX 40 contract. And the story is quite similar with regards to the S&P 500. As you can see here, we are still in an upward trend, going back to March of this year. But if I zoom into the daily chart, you can see here that we are now on track for 5 consecutive days of weaker prices with regards to the S&P 500 on that more hawkish note coming out from the Fed speakers ahead of the ban for them to speak just before the Federal Reserve announces its next rate decision later this month. So here, what does the chart tell us? Well, basically, we're heading back down again towards yesterday's low at 4,430. Fall through there could take us down again towards this March to September uptrend line around 4,405. And below there, we've got also potential support going back to the the early July low at 4,378. But the story basically is at the moment that the equity indices globally are heading back down again on worries that rising commodity prices such as oil will have a negative impact on inflation, and that if inflation were to rise again, central banks might have to hike their rates even further. And this is push down sentiment with regards to equity markets. The fact that increasing commodity prices with regards to oil, gas, because of the LNG strike with regards to Chevron in Australia, and also other commodities such as cocoa and sugar hitting multi-decade highs, and that worrying investors because it could lead to another spurt of inflation, and therefore the possibility of further rate hikes being seen, that has actually helped the US dollar, which is currently on track for its 8th consecutive week of gains. And if you look at the inverse here, as you can see, euro dollar has now slipped to levels last traded back in June of this year and is really on track to head down towards the May low at 106.36. So that's our next downside target, which we've been mentioning for the last couple of weeks, and not just here on Charting the Markets, but also on the other shows that we have. And as we can see here on euro dollar, you can see that we are trading in a downward channel, and the decline is very organized, very gradual, but it's clearly heading down with regards to euro dollar. And basically, the resistance area you can speak of, which is quite a long way away now, is 107.66. That's the late August low. And above there, we've got the 200-day simple moving average here in red at 108.25. But basically below that, I would expect further downside to be seen. And the story is quite similar with regards to the British pound against the US dollar. Here, we've also slid to levels last seen back in June of this year and are on track to head down to the red line here. That is to say the 200-day simple moving average, 124.28. And if we were to fall through there, we could head down again towards the May low at 123.09. Now, earlier this week, we had some acceleration to the downside with regards to cable, and that was on the back of the Bank of England Governor Andrew Bailey saying that the Bank of England might not have to hike rates one more time in this cycle. And that has obviously led to expectations of another rate hike being seen in the UK diminishing, and therefore the currency weakening against the US dollar. A weakening of a currency against the US dollar has also been seen with regards to the the Chinese yuan. And as you can see here, we've been in an uptrend since the beginning of this year. And now we're trading at levels last seen back in November of 2022 at above the August high at 735 or so. And here it looks as if we are heading towards levels last seen, as I said, in November we're trading now. But if I zoom out onto a weekly chart, you can see here the October 2022 high at 737.73. That would be the next technical upside target. And above there, we have nothing, because that is an all-time high for the US dollar versus the Chinese yuan. So further upside in store for this currency pair, and basically this bullish view on the currency pair, bullish for the US dollar, that is to say, will remain in play provided we stay above the current September low at 723.92. The rising US dollar has had a negative impact on quite a few commodities, but others are rallying quite strongly. But if you look at the price of gold, you can see the effect of the US dollar. That is to say, the rise in the US dollar over the past 8 weeks now has led to the price of gold coming off again in the course of this week. And here what is interesting from a technical perspective is that we have tested and fallen back to, but it's currently holding the 200-day simple moving average at $1,920 per troy ounce here in red. And short term, we're trying to level out above that. But if we were to next week, for example, fall through this week's low at $1,915 per troy ounce, then I wouldn't be surprised if we were to fall back down again towards the $1,900 mark, and also the 1,893 low seen back in June of this year. Now, this is because the upside in the US dollar is quite strong. We have a lot of momentum behind this strong up move. As I said, the US dollar on track for 8 consecutive weeks of gains. And this would be the longest winning streak since 2014. So it's very unlikely that we will see a trend reversal. But if there were to be one, it could have to do with the US CPI inflation data out next week. That could influence the price of the US dollar. If we move on to another currency, another commodity, you can see here the price of Brent crude oil has been rising since its late June low from $71.85 all the way up to above the $90 mark here with regards to Brent crude oil. And we look as if we could head higher again. And the latest rise this week, as we're on track for another weekly gain here with regards to the price of crude oil, was on the back of both Russia and also Saudi Arabia sticking to their voluntary output cuts and saying that they would maintain these until the end of the year. And that was much longer than market participants had expected. So Saudi Arabia voluntary cutting its output by 1 million barrels a day, and Russia by 300,000 barrels a day. And that has obviously led to supply worries and pushed the price of oil up, as you can see here. Now, if we were to rise above $90.97, that is to say this week's high, then the next upside target I've got on the chart here would take us back to the $91.08 low seen back in August of 2022, and then above there you've got the $92.43 low from July of 2022. So these are the next upside targets for the oil price, and basically from a technical perspective, this medium-term uptrend will remain in place as long as we stay above the late August lows at $81.68. Now, obviously, that's a long way away. If you're a shorter-term trader, perhaps, and if you're long, moving once take profit stop up to below the last reaction low, that is to say a low below the previous candle and the next candle that was made on the 5th of September, and that one here comes in at $87.91. So basically above there, the uptrend is very much intact. Now, I mentioned other commodities hitting multi-year and decade highs, and one of these was the price of New York number 11 sugar. And as you can see here, the sugar price has now risen above the high seen back in April at 26.81. And I would have to go onto a monthly chart, which is what I'm doing here, to see the next upside target. And you can see here we're now trading at levels last seen back in October of 2011. And the next upside target really would be the psychological 30 area or so. And we had 30.04 back in February 2010. And the last time we had those levels traded was in September of 2011. So the price of sugar, which has risen this year, I think, by about 48%, is very much on track to head further up. As you can see here, we're on track for 3 consecutive weeks of gains. And basically, any short-term support should come in around the April high at 26.81. But provided we stay above this week's low seen on Thursday, yesterday, at 26.16, further upside is expected to be seen with regards to the price of sugar. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X, formerly known as Twitter. And my handle is @AxelR_IG.